Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We are back, and you are listening to the Financial Survival Network. It's Monday, and that means it's Manipulation Monday, and it's time for Andrew Hoffman. Andy, how are you?
Good. What an honor to be poster child for Manipulation Monday.
Well, hey, it's Monday where, everybody's kind of still waking up, and that's where they unload, right?
If you're talking about manipulation, it's 24/7. But yes, our goal is to make sure that people know what's going on. And Monday's the perfect time to do it because there's a weekend stupor that sets in. But once you get to, in precious metals, once you get to Sunday night, let alone Monday morning, you realize just how bad the world is. And, that's why we're doing 3 segments every time.
Yeah, exactly. It's just there's no end in sight. It's getting worse and worse, right?
Yeah, it's that simple. When you're in a Ponzi scheme, it must increase exponentially, and it must do so without confidence being lost. So, what I call the horrible headlines, there's no shortage. There's just more and more and more things to talk about because they're all interrelated.
Yeah, and like you say, once it becomes a slippery slope, once you get started, you can't stop after a while, and the numbers get bigger and bigger. They become astronomical, until finally it becomes unmanageable and it collapses.
It's not the first time it's happened in history. It's happened dozens and dozens of times. In fact, we've lost 600 currencies already. But the key inflection point here was 1971, when not only did we go off the gold standard by reneging on Bretton Woods, but the entire world let us do it for the same greedy, selfish reason. The people in power realized that they would have a free credit card to charge up for a couple of decades, and it's all charged up right now, which is why what the ECB just did last week, and the Bank of Japan before it, and the Fed, if it's QE, is not working, and it won't work. It'll just make things worse.
Well, what I would say is, and I was just thinking about this over lunch, is when you have a disaster or crisis caused by central planning, you can't reasonably believe that central planning is going to cure the disaster that it caused. It never has done it in the history of man, and it never will. And this time is not going to be any different.
Right. We go through all the cliches about, giving more drugs to a drug addict doesn't help, or, more alcohol to an alcoholic. And in this case, we're talking about the proven inefficiency of government planning. It's like, a friend of mine said to me, what's wrong with you? Why are you against Obamacare? Are you a pure capitalist? And I said, it's not that I'm against anything per se. I look at everything on a case-by-case basis. The fact is that government intervention into economies is inefficient and screws it up.
Malinvestment.
Yeah. And when you talk about, something like healthcare, which has just tremendous ramifications on everything else, from the amount of taxes that have to be collected, to the inefficiency of the system, to the wealth inequality that it creates, to causing doctors to not, or students to not want to become doctors. It's a catastrophic impact on a population over time.
Yeah, it's just a case of any market that the government intervenes in, either by controlling prices, by controlling interest rates, by controlling returns on investment, by regulation, whatever, causes malinvestment. Okay? It causes, if they were controlling the price of lead pencils, okay, it's either going to cause too many lead pencils to be created or not enough. Take your pick. Or lead pencils of inferior quality or lead pencils of too great a quality for the market, but they're going to screw the market up because they shouldn't be involved in the lead pencil market. That's what it comes down to. Really couldn't be simpler than that.
We talked before this podcast of the million things we want to talk about, but we didn't even talk about, you bring up the controls in Thailand there. They just had a coup. This is Thailand. This is supposed to be a peaceful place. And I see today they announced price controls for the next 6 months because of surging inflation, just like they tried to do in Venezuela. Didn't help. You see, they're having the World Cup.
Toilet paper shortages there.
Yeah, they have the World Cup coming up in Brazil next week, and the same kind of pressures are going on. They're desperately trying to keep the masses down so that they can have a successful World Cup. I mean, the absolute worst possible thing you could do in a capitalist economy is to limit the supply or the demand, because as we saw in India, with limiting the demand, you cause a black market. And if you limit the prices or limit the supply, ultimately it leads to shortages and more price increases.
And they just won't learn. They refuse to learn. And the same thing has happened countless times. It happened in the United States. And I found out that some friends of mine owned a movie theater chain in New Jersey, and they were the only people in New Jersey that ever got brought up on a wage and price case for violating Nixon's wage and price controls in New Jersey. So they had to roll back their prices and actually had to roll them back to less than what they were before the wage and price controls went into effect to effectively give the consumers a refund. And now we got the opposite. Now they're trying to raise the minimum wage so that Obama could get more votes for the Democrats in the next election. I mean, how many articles do you need to read from CEOs saying that raising the minimum wage is going to cause them to fire people, just like what they've done with Obamacare is causing people to get fired, or better yet, to be cut from the levels of full time so that they don't get benefits. I mean, this is what we're talking about. This is how you destroy an economy and you destroy the middle class. Yeah, and all those kiosks that they've hired in Europe, because it's impossible to get rid of employees. So even though they need more employees, they hire these kiosks in McDonald's and in, all the fast food places. So it's no longer, may I take your order, please? It's step up to the next kiosk. And I was in a Hertz rent-a-car in Arizona.
Yeah, I know what you're talking about. There's a person live on the computer.
Yeah, and you know what's coming, right? You know what's coming next.
Well, it's no different than when you call, let's say, Dell, and you get someone in India. I mean, it's outsourcing. It's smart business technology. This is just another thing. Look, the jobs went overseas a long time ago because it's cheaper to be done over there. And, yes, some corporations made that pace go faster with a lot of lobbying, but it would have happened anyway. And you're going to see it in McDonald's, whether the minimum wage is higher or not. Technology is yet another reason why there's too many people for too few jobs. And that means there's going to be more entitlements and more borrowing and taxing and wealth inequality in a fiat currency system, which does not inhibit at all the creation of money. So it'll end just like it always ends, except more spectacularly so, because now it's a global phenomenon, not isolated, but to a couple of countries.
Yep. And even in places where the labor is cheap, these robots are getting so inexpensive that it's like, who needs to bother with people? They're just a pain in the neck. Dealing with employees, bring in the robots, right?
I mean, hey, Amazon.com, people shop on Amazon.com for everything. Why would anyone go to a store when they could just do it at their home and get the best possible price for it and none of the hassle? And again, another reason why just hundreds of thousands of jobs have been lost and will continue to be lost. And this has nothing to do with the money printing or the other things we talk about. There's just so many reasons why the economy is going in the wrong direction and why debt will continue to increase. And it will be unstoppable until the system crashes upon itself. And, what do you think is going to be left standing? Real money.
Yeah, we're getting closer to the day, right?
Absolutely.
So on that cheerful note, let's look at the at Manipulation Monday's lovely headlines here. We got NERP now. We're no longer at ZERP. We've gone into NERP.
Yes, this is, of course, you're talking about the ECB's decision last week, which, I wrote back in, I think, February, an article called Draghi's Reckoning Day, saying they have to do this. They have to do something draconian. They can't pretend for, as they have for the past 2 years, well, we'll do whatever it takes to save the euro. Well, you said that 2 years ago, Goldman Mario, and since that time, Europe's economy has plunged to its lowest level ever since the Eurozone has been created, probably the lowest level in any of our lifetimes. We're talking about unemployment, debt, and the cost of living is way up there. So they had to do something, and they did far more than anyone expected. They took rates on deposits for the banks into the central bank to a negative, which was what got the biggest headline, and is to me a major inflection point in the war of real money versus paper money. But they also did several other things, which we'll talk about as well. But when it comes to this negative interest rate, I mean, they have gone beyond where the Bank of Japan has even gone, because they are so terrified by the rapidly contracting loans in the Eurozone that they are trying to charge banks, which will in turn charge the depositors, money to keep the money in the central bank, which is insane because the banks are insolvent in the first place. That's why they're not lending any money. That's why he had to institute the LTRO for another 400 billion euros.
Yeah.
And so, again, no one is going to be borrowing more money because of this. And all it's going to do is cause depositors to take money out of the system and do things like buy gold, and for the banks to just find other ways to park that money. There are plenty of ways they can park it that's not in the European Central Bank. We'll just send it over to the Fed.
They're going to be buying stocks in the United States. That's what I predict.
Well, yeah, the Fed is and the PPT, they've clearly created a situation where everyone knows that every day the stock market must go up. I mean, between the valuation extremes, and we're talking about valuations, margin debt, complacency, bull-bear ratios. But on top of that, we're talking about record low VIX levels and record low trading volumes. There is no market left, and anyone who is left, which is typically the 1% that get the free money, know that the PT is there every day to take the stock market higher, no matter what. So yes, some of that money is just going to go in and create a bigger bubble until, of course, it crashes, either via 2008 style, which it certainly could, or via hyperinflation. I mean, one of the other is going to happen, and that's going to, make the stock market go up forever without there being ramifications. I mean, the real world is going to get worse and worse. It's just more money printing. And again, we talk about the ECB. It's not just this negative interest rate. The long-term refinancing operation, or LTRO, was something they did back in 2010 and 11 to give basically free loans to insolvent banks. Well, now they're doing it again. And on top of that, no one even talks about, they have this thing called the SMP, which was a way of the ECB buying sovereign debt. Well, they did that in 2010 to 12, and then they stopped it because they've been sterilizing it, which means, yes, they're still buying the bonds, but they are theoretically been, taking some liquidity out of the system. But now they said they're not going to sterilize it anymore. So to me, that means they announced QE. Frankly, it's no different to me than when the Fed had what was called Operation Twist a few years ago before they formally announced QE3. Operation Twist meant that they would sell short-term treasury bonds and buy long-term treasury bonds. It's the same thing. The long-term treasury bonds have a far bigger impact on the economy than the short-term treasury bonds. But on top of that, while they were doing it, they also had ZIRP going on. ZIRP, by definition, means printing money and buying short-term treasury bonds. So it's Operation Twist and ZIRP combined is unsterilized SMP. And that's what the ECB just announced. So, this was a really draconian announcement. And on top of that, as Draghi said, we're ready to do far more. They said we are intensely preparing for asset purchases, that is QE. So, again, how is Europe doing, people? Do you think the euro is going to outperform gold over time?
Think again. And on that note, we got a lot more to talk about when we return on the Financial Survival Network.
FSN Radio.
Urgent alert. Ex-Secret Service agent claims it's worse than people know. One of Obama's former Secret Service agents recently smelled a rat. What he discovered inside our government was so devastating, he only saw one option. He quit. What's worse, he fears what he found could affect your job, your neighborhood, and most importantly, your family, very soon. It's worse than people know, he said in a recent interview, and I'm not trying to scare you either. We too share his concerns. This is why we've devoted the better part of 3 years collecting solutions for nearly all problems created by intrusive governments, and we've succeeded. Go to hiddensecrets1.info to check out all the details. Our panel of insiders have devised a legal but sneaky set of solutions to help you reclaim your privacy from the NSA, opt out of Obamacare, and make a bundle from little-known investments and small business opportunities. Simply visit hiddensecrets1.info. That's hidden secrets, the number 1.info.
The Financial Survival Network. It's all about what's next.
We're back. It's Manipulation Monday. We're speaking with Andrew Hoffman. So what else we got on this wonderful list here? What else are they planning here, Andy? Because if they ever did stop printing money, you think they ever stopped printing money over there at the EU, or they pretended to, Andy?
No, they look, it's just like anything else. They say one thing and they do another thing. It's kind of like the Fed with the taper. Again, I'll go back to my article, Proof of the Tapering Mirage. The new game, look, the whole game broke in 2008, but it was 2011 when they realized that the big money printing surge wasn't working. And that's when you saw, the U.S. lose its AAA status and all the sovereign bonds in Europe were collapsing again, the stock markets, where they said, we can't just say we're going to do something and hope that it works. We have to do a lot more behind the scenes. Well, I mean, why on earth would we tell everyone what we're doing? We have unlimited printing presses. We have the Exchange Stabilization Fund. We have the Working Group on Capital Markets. We have the Fed, which is completely untransparent. Why would we tell people what we're doing? And so what they decided to do is just massively print and manipulate markets behind the scenes. And then, of course, they're like, well, we got the stock market up really high, and interest rates are really low, so we can say that we're tapering so that we can maintain some credibility. Just like, Draghi will say whatever it takes and we get the stock markets higher and then we can pretend that we're not QEing. But of course they are. I mean, it's been proven quantitatively. Who the heck is buying treasuries if everyone else, the numbers show that no one's buying treasuries, except, of course, Belgium is all of a sudden buying treasuries,
right.
Which they're not. So the fact is, of course, the ECB is doing it. And on top of that, they still have everyone forgets the swap agreement that they have ongoing with the Fed, which was just validated again at the last FOMC meeting, which means the Fed is giving unlimited loans to European banks, which they don't classify as loans because they're swaps. So some of the stuff is in plain sight, like the Belgium and like these swaps. And some of it is completely out of sight, like the 16 trillion of secret loans we learned about thereafter. So, no, the European Bank has been doing everything imaginable to aid the increase in financial assets. And the problem is it's not working, which is why they have to now overtly say, yes, we're going to negative rates, we're bringing back the LTRO, we're unsterilizing S&P. And eventually they're going to do their QE, just like, eventually Janet Yellen is going to have to say enough with the tapering already, whether they're doing it or not, because eventually they can't be seen as doing nothing when the economy continues to collapse.
Yeah, I guess that's what it comes down to. They got to look like they're doing something, right?
Yeah. I mean, look, we just had minus 1% GDP. I mean, every year, Goldman Sachs and everyone says we're going to have 3 or 4% GDP growth next year. And it never happens. And when it's bad in the first half, they say, well, don't worry, the second half will be better. But this year, again, we had the worst holiday season since the bottom in 2009. The first quarter was down 1% GDP. And of course, these are all BS numbers because the inflation numbers are completely ridiculous. And then, and it was not the weather. The weather was a very small part of the big miss compared to expectations. And now you see they just announced a massive trade deficit last month, which is already going to cut a 0.5 percentage point from the second quarter GDP, and so on and so forth. So there's not a chance in hell we're going to get 3% GDP growth this year. And for all you know, it'll be 1% or 2%. And, next year they'll just do the same thing. It's going to be 3 or 4%. Don't worry about it. Buy stocks.
Yeah, should be okay with that, right? Buy stocks. So what about the NFP report? Any thoughts, insights on that?
Yeah. Well, remember last month where 1 million people left the labor force, but the government reported 288,000 new jobs. And you remember the article I wrote was called Three Numbers, plus 288, plus 234, and minus 806, which was referring to the quote jobs. The second 234 was the amount that came from the birth-death model, meaning they're not real jobs.
Not really.
And then, of course, the 806 was the net people that left the labor force. Well, this time around, honestly, you can almost say it was worse. 217,000 jobs were reported, but 205 came from the birth-death model. So an even greater percentage of the jobs were fake jobs. The labor participation rate stayed at a 35-year low. And again, let's talk about the quality of jobs, okay? Yes, most of the jobs, as usual, were temp jobs, part-time jobs, minimum wage jobs. I mean, 5 or 10 years ago, the BLS wouldn't count a part-time job as a job, let alone a temp job, which is, could be less than a part-time job. But the scariest part of all is, look, we know that the labor participation rate in the 25 to 39 group is at an all-time low. But when you look at what's going on with the age groups in general, all of the job growth has been in the 55 to 69 age group, which is just an astounding number. Like this particular in May, plus 176,000 jobs out of 217 were in the 55 to 69 age group. And you see the big propaganda line last week was, well, this month we finally recouped all the jobs lost in the big 2008 downturn.
I believe
the
that.
Problem is, first of all, we've had far more people have left the labor force than, quote, jobs created. And of those jobs, most of them have been birth-death jobs. But of the jobs that were theoretically created, they were all in the 55 to 69 age group. Every other category is down. And you go, well, what were these jobs in the 55 to 69 age group that have been added?
They're greeters at Walmart, right?
Yeah, let's face it. Look, I'm 43 years old. And I'm out of the mainstream workforce now for 5 or 10 years. I'm in my precious metal world. And I got to think, if I was going to go back to that world, everyone imaginable would say you're overqualified, you'd want too much money. There's so much competition out there. And I'm in my prime years, but there's so much competition out there from people, from students.
Yeah, I can't even picture going back to the job market. There's no way they'd ever hire me.
Yeah. And then on top of that, you have people who have no savings. We know that a quarter of Americans have no savings, and most have less than 10,000. So you have all these people over 55 who are begging their way into the labor force at low wages and probably in not so great jobs, cannibalizing jobs from the people who need the most, that are building their families, and it won't change.
Yep, this is true. So very low skill, probably minimum wage jobs at Walmart and Target and other such places, right? I see them down in Florida here.
I mean, do you think there's literally a single person aged 69 years old who was hired in the past year to get millions of dollars? Okay, maybe there might have been some CEO somewhere, but even the biggest companies in the world, they don't hire 69-year-olds to be CEOs anymore. Mark
Zuckerberg's father, right?
Yeah, I mean, if you're age 69 and you've got a job, it is a part-time job at McDonald's. I mean, there is no other place
or at a mini mart
get a job.
At a mini mart,
Yeah,
basically
and
ringing
joke
up
about Walmart. I mean, Walmart doesn't hire full-time anymore because of Obamacare. They've made it pretty clear we're not doing that because we can't afford Obamacare.
Yeah, even the illustrious John Maynard Keynes said that you don't raise taxes during a depression.
The problem is, if you don't, how do you pay for things? And that's the beauty of this. That's what I was writing about today. My article is called something about the most dangerous economic time ever. I mean, when they go to negative interest rates, that means that the banks are going to be lending less. I mean, they're not going to be lending more. They're going to be scrambling to get their money out of the system, and that means that they're also going to be taking money out of the hands of depositors who are going to have to pay the system. So these deficits have to get paid for some way, shape, or form. So the government is going to increase taxes or print money. There's no two ways about it.
They'll print money.
Yeah, when the banks get their zero interest rates and their negative interest rate, we get higher taxes and money printing.
Mm-hmm. Pretty much. They will print money. The easiest way to do it, right? Least painful way, correct?
Well, it's the only way to do it. I mean, again, that's the whole point of this Ponzi scheme. You can't stop it. The Fed can't, first of all, when they say taper, it just means, even if they actually were doing it, it just means we are printing less money than we were. They're not stopping it. They can never stop it. They're not going to come out and say, yeah, we're selling our bonds and we're going to take interest rates higher.
Nope.
The point is they can't stop doing it, because the second that they stop, everything falls apart. When you have a nation built on debt, exponentially increasing debt, you have to have record low interest rates. There's no choice. And
Yep.
if you do anything to raise interest rates, it's going to crash the economy and crash the stock markets and the real estate markets, et cetera.
Yep. And as Fyodor Dostoevsky said, only one thing matters, one thing, to be able to dare. And that's what Janet Yellen is doing. And more on that when we return on the Financial Survival Network.
FSN Radio. It's all about what's next.
Warning, you might live in a no-constitution zone. It's the shocking story you won't see on TV. Depending upon where you live in the United States, you may no longer have constitutional rights. Politicians are quietly squeezing the middle class to micromanage you and extract your wealth. Want to see how? Watch the free video at noconstitutionzone.com. Soon, you'll have the last laugh by using these cultural contraband tricks and profit like a king. That's noconstitutionzone.com.
The Financial Survival Network. It's all about what's next.
We're back. It's Manipulation Monday. Andrew Hoffman's on with us now. So where does that leave us, Andy? We got Japan's low-flying economy. We got China and negative PMI, and we got a little bit of a rehypothecation scandal taking place there now, don't we, with base metals, huh?
Right. Well, we've been talking, I've been writing for the longest time about diffusion indices, and I'll get to the hypothecation in a second. That's these economic reports that say, they're basically surveys. They survey people yes and no type questions. And
like at the mall, you used to go to the mall and they would say, what do you think about this? Or what do you think about that?
Yeah.
Right.
And when they do these things, they can make the numbers whatever they want. It's a perfect example. Like with the Fed, they just do whatever they want behind the scenes. The government just can create any number it wants. But better yet, they make adjustments, just like the NFP report, seasonal adjustments, birth, death adjustments, et cetera. And when you look at the economic data coming out for
my favorite one is it's that time of the month adjustment.
Yeah, yeah. I mean, when you look at the data and you see the propaganda saying the economy is increasing, it's not. Any real data, any empirical data is down. In fact, last week we saw construction orders, factory orders, and durable goods orders. All were barely positive. But if you incorporate government defense orders, they were all negative. But then you look at these diffusion indices, and they're all higher. My favorite was the ISM one that came out last week, where first they said it's lower, and then an hour later they said, oh, no, we were wrong, it's higher. And then they an hour later they said, oh, wait, it was too high, we have to take it down again. And it was back to where it started. And the reason, when you look into it, is they said, we used the wrong seasonal adjustment factor. And I'm going, how do you seasonally adjust a yes-no question? So they kind of shot themselves in the foot. It even came out amongst all this that they're hiring private consulting firms to do it for them. So it's like a government agency, a huge government agency with tons of economists can't even do it themselves. So that's the U.S. what's going on. And the other place, by the way, where you see strength in the economy are these weekly jobless claims, which have been clearly proven to have, since 2009, absolutely, utterly zero correlation with the real labor market. I mean, 2009 is when you started to see weekly jobless claims start to plunge, but it's also when you saw labor participation start to plunge. So why anyone looks at those numbers, which themselves are seasonally adjusted every week, and tries to say it means the economy's good, when you see at the same time what we were just talking about the actual real economy, which is having probably 25% unemployment, and you realize it's just lies. Now, as for China, they have private PMIs and they have public PMIs. The official PMI, for instance, the composite public PMI, for the last 2 years, every month it's between 50 and 51, which is in itself horrible. I mean, it's barely positive, but it's comical. It'll be 50.2, 50.4, 50.3. Last week it went from 50.4 to 50.8, and they're crowing how it's so great. But the fact is, China itself, last August, they said it was something like, quote, "We cannot guarantee that these things are truthful," because they have no idea. How do you even gauge something like that in a country?
That's like
the
COMEX. They couldn't guarantee the inventories, right? The inventories might not be there.
Oh, yeah. I mean, you got to love them. Yeah, that was last June when they said they put out that disclaimer, let alone, I mean, just look at the whole COMEX data. It's just a complete joke to believe anything that they put out. But then again, in China, 2 days later, the private PMI, the HSBC one, came out, and of course it was in the 40s. I mean, it's all lies. And you're talking about the rehypothecation scandal, which is an incredible situation. We've talked all along how no one has printed more money in the last 5 years than China. You wouldn't know it because they don't come out like the Fed and ECB with meetings every week saying we're doing this. But they have in so many ways that have been proven, including, what they're doing now with the yuan, reducing its value. But this scandal that's going on is, for years, the Chinese government just put their head aside and allowed the shadow banking industry to explode, where people would borrow money for real estate projects, ghost cities. And a big way they were doing it to avoid taxation and regulation was to use copper and iron ore and other metals as collateral to borrow money. And we just found out last week that a lot of that metal doesn't exist. It's the same thing as the COMEX. And so you're seeing iron ore and copper prices.
They were seizing ships. They were out there meeting ships. Who owns this? Who owns this stuff? It's like the producers. They have a producer economy, meaning that play the producers. Remember Zero Mostel and Phil Silvers, and they sell 1,000% of the stock to a bunch of old ladies, hoping that it's going to fail, and then it becomes a blockbuster Broadway hit. And they wind up in jail, and they say, we'll never do it again. And, of course, they're selling stock in jail. That's what China's economy is all about. It's the producer's economy.
Well, there's your title for this week.
It's the world economy is the producer's economy.
I mean, it's exactly the things that what the Chinese have done, to create the bubble over there are simply astounding. I mean, people talk about what the Fed has done and the ECB and the Bank of Japan. I don't think they hold a candle to the idiocy of the PBOC in allowing these things to happen. And as a result, you're seeing literally a collapse in the real estate and construction market over there. And it's exposing everything from the shadow loans to the derivatives that are underlying, all these idiot bets that the yuan would go up forever. When we're having this big currency war going on worldwide. And of course, now this hypothecation scandal, again, showing that if you don't have the real thing in your hand,
even if it's iron, even if it's scrap iron or aluminum, if you don't own it in China, then you have nothing.
Yeah. And I wouldn't be surprised if iron ore and copper prices go to nothing. And I don't mean nothing theoretically. I mean, you look up at the commodities that are rising, food, energy, look at crude oil prices today. They're not collapsing with copper and iron ore. They're sitting up at their highs because that's what you have to pay for. That's where the centrally printed money goes to.
Yep. It just doesn't get any better. And, that's why I always had a thing about buying Chinese stocks. Now, I grant you, every stock has the potential of being fraudulent in today's world. But, they don't even believe in gap there or anything. I mean, you really can't believe any number for any Chinese company. It's just the fact of the matter. You have to question them, put it that way.
And the sad thing is, again, especially if you listen to the evil troika, the MSM, Wall Street, Washington, you'd think that we have some great thing going on here with all this regulation. I mean, when you talk about financial market regulation, we are barely above China these days. Are you kidding me? I was a sell-side analyst. I left that industry 10 years ago. I mean, to think that what the business that I was in, what it's become today with all the FASB is allowing people to put mark to anything on their balance sheets, all the offshore stuff. I mean, I'm reading today about how nations of the world are now competing, including England, to get people into their countries so they don't have to pay taxes, and the Dodd-Frank and the manipulation of the markets that goes on. I mean, to me, the accounting that goes on at U.S. companies right now is barely better than in China. That's how bad it's gotten.
Yeah, well, the one thing is that generally, if they say they have money in the bank, they probably do. In China, you can't even believe that. So, but yeah, I know what you're saying. It's all suspect.
Yeah, well, we'll say we have money in the bank, except they don't tell you about all the offshore stuff. I mean, that Enron stuff is everywhere now, especially in the too big to fail banks, which are 30 or 40% of the earnings with quotes around it in our economy.
Yeah, forget about the banks. But you're right. You're right. I won't argue with you, but if there's a little bit of credibility left, there's none there never was any there.
Absolutely. There never was any there, that's for sure. There might have been perceived credibility when the Chinese stock market was going up, just like anything else. People want to be into a bull market. The sheep are there. But now that the Chinese market has collapsed and will continue to do so, it shows you look at it and you go, do they even have an economy? Yeah. I mean, their economy consists of the government taking all the money and basically funneling it into ridiculous things and fostering horrible, debt and stupidity.
And on that note, debt and stupidity go hand in hand in the world economy. And Andy, we'll talk to you next week and pick up where we left off. Find Andy, milesfranklin.com. Subscribe to his daily newsletter, as well as Bill Halter's Must Reading, and financialsurvivalnetwork.com. Sign up for our newsletter. Andy, we'll talk with you again real soon. Bye.
Yep. Bye-bye.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.